Dear students, today I will tell you about joint stock company and its features. You know there are 5 forms of business organization in private sector. Sole proprietorship, partnership, Hindu undivided family business, cooperative and joint stock company. Joint stock company is one of the important forms of business organization in private sector. Do you know what is joint stock company? Joint stock company is an artificial person created by law with perpetual succession and common seal, capital of which is divided into small units which are known as shares. These shares are purchased by the person who are known as shareholders. If we look over this definition, we may know various features of joint stock company. For clear understanding of joint stock company, you must know about these features in details. First of all, joint stock company is an artificial person. Means it is not human being but works as an human being. It can't eat or breathe or walk on the streets. But like human being, joint stock company can sway or can be swayed in the court and may sign the contracts with outside parties. Suppose you purchase some goods from Reliance Industries Limited. What will you say? Purchase goods from Mukesh Ambani, who is the chairperson of the Reliance Industries Limited, or purchase goods from Reliance Industries Limited. Definitely you will say purchase goods from Reliance Industries Limited. Why? Because it is a joint stock company, an artificial person. Not only this, definitely it is an artificial person. It also has separate legal entity. Separate from whom? It has separate legal entity from its members, or you can say owners. And who are the owners of joint stock company? All the investors who are known as shareholders here. Means joint stock company have distinct entity from its members. Assets and liabilities of the members are not related to the company. And in the same manner, assets and liabilities of the company are not related to the shareholders. Both of these have separate entities. As I told you, joint stock company is a separate legal entity. Why are we using word legal here? Because it is compulsory to get registration of this type of form of business organization as per provisions of the Indian Companies Act 2013. Without registration, we cannot form a joint stock company, and registration process is not easy. It is very complicated process. There are various documents which are submitted to the registrar of the companies compulsorily, like memorandum of association, articles of association, prospectus, etc. And it is not easy to make these types of the documents. Normally experts like chartered accountants prepare these documents. In this manner, process of registration is not only complicated but also time consuming and expensive. Another feature of joint stock company is perpetual succession. Means there is no effect on the life of joint stock company due to admission of new member, retirement or death of the old member, lunacy or any kind of incapability. Also does not affect life of the joint stock company. Even directors, who are the representative of shareholders, may leave the firm due to any reason. Another member will take over the charge. Means life of joint stock company is permanent. It can be closed only after adopting the specific legal procedure which is prescribed for winding up of joint stock company in the Companies Act 2013. If a company has separate legal entity from its members, one important question arises here regarding management. Who will manage the business? So answer of this question here is directors will manage the business organization through the managers. And who are the directors? Directors are the representative of shareholders. Directors are elected through voting. And voting rights are available to all the shareholders in the proportion of shares held by them. Means more shares, more voting rights, less shares, less voting rights. Means for the purpose of management of joint stock company, we adopt democratic method of election. One more interesting fact about joint stock company is limited liability of its members. Means shareholders. All the shareholders' liability is limited to their capital contribution in the company. Shareholders' personal assets are not at risk. These personal assets of the shareholders cannot be used to pay debts of joint stock company. In case of financial crisis of joint stock company, if shareholders had paid the full amount on the shares held by them, then no amount can be asked from them further. It can be understood through an example. For example, if a shareholder holding 5,000 shares of rupees 10 each in a company and had paid rupees 8 per share already, then only rupees 2 per share, which is the remaining amount on these shares, can be demanded. Means total amount of rupees 10,000 can be demanded. But if that shareholders had paid the full amount of rupees 10 per share already, then no amount will be demanded from the shareholder in case of financial crisis. Means liability of the shareholders is limited to the extent of capital contributed by them. One more interesting fact here is signature. Signature of joint stock company. For making any contract, you need to sign the document, and I told you already that joint stock company is an artificial person created by law. It is not human being. But joint stock company also can make contracts with the outside parties. Then where are sign of the artificial person? So here I am telling you, the common seal is used as signature of joint stock company. On every document of joint stock company, there must be a common seal. Otherwise, document will not be binding on the joint stock company in absence of the common seal. Means, common seal is treated as official signature of joint stock company. And profit and loss of the joint stock company. What about that? Profit and loss of joint stock company shared in the proportion of capital contributed by them. In case of profit, dividend is distributed amongst the shareholders. And in what proportion? In the proportion of shares held by them. Dividend is the part of the profit which is distributed among shareholders. In the same manner, in case of financial difficulties, losses also are borne by all shareholders in the proportion of shares held by them. So these are some of the important features of joint stock company. Hopefully, you will be able to understand the concept of joint stock company easily through this video. Thank you. Thanks for watching this video.